Hello, everybody. Welcome to today's webinar brought to you by Kenanga Investment Bank that is titled Live Chat with Western Gold Resources Limited, Realizing the Potential of Gold Mining. Thank you, everybody, for tuning in to today's webinar. This is the first Can Trade webinar for the year of 2022. And today we have a special guest tuning in all the way from Perth in Australia. So we are very glad to have Warren here on the webinar today. Now, before we begin, as usual, may I introduce myself first? My name is Shen Chu. I will be the moderator for this session. And a disclaimer for this webinar is that this corporate presentation webinar is only for educational purpose. So in no way that I give any recommendation for you to buy or sell any company that we discuss in this webinar. Should you make any investment decision, you are 100% and solely responsible for all your investment risks. Is that okay? All right. So today we're going to look into gold mining companies. Okay. Commodity now is on a super bull cycle. As you may have realized that a lot of things are getting more and more expensive, and a lot of commodity resources are actually at their record high level. So it's very timely that we look at gold mining as a means for you to, for the exposure to the gold price. Okay, and in this session with Western Gold Resources, you're going to learn the business model of gold mining and also what are the potential of the project for the company. All right. So allow me to briefly introduce our guest speaker tonight. He is none other than the Managing Director of Western Gold Resources Limited, Mr. Warren Thorne. Mr. Thorne is a geologist with over 20 years of experience, mainly associated with gold, iron ore, copper, and manganese within Western Australia, Queensland, Brazil, and West Africa. Mr. Thorne has extensive experience in all stages of regional and near mine exploration project management, from conceptual targeting and ground acquisition through to resource definition, drilling programs, and open cut mining geology. Mr. Thorne has held senior exploration and project management roles with a variety of major Australian and international companies, including Mineral Resources Limited, Rio Tinto Iron Ore, and Hancock Prospecting. So that is Mr. Warren Thorne. How are you, Mr. Warren?
Yeah, I'm very well, thanks, Shane. Excited to be here, and yeah, thanks for the time. Great.
Thanks for tuning into our webinar as a guest speaker tonight. So without further ado, let me hand over the session to you, Warren. You may go ahead and share your screen.
You can see that all right, Shane?
Yes, you can share your screen.
Fantastic. As Shane alluded to there, we're going to speak about a bit of background about gold mining, its context globally, more so in Australia and down to Western Australia, where our project is, and then some of the fundamentals of our project and why we believe it's a good project and where we see our project going and delivering value for our shareholders.
Okay, are you putting up your slide?
Yep, can you see that all right?
Oh no, it's not yet up. Your screen sharing is not yet up.
Okay, that's not good news at all.
All right.
I do not want that from there. Share screen.
Yes, now we are on your PowerPoint.
Yeah, there we go.
Yeah,
my apologies, Shane. My apologies.
Fantastic.
Good stuff. Yeah, I'd like to start by acknowledgement of country, and I'd like to begin by acknowledging the Martu people. They're the traditional custodians of the land where we work on our project, and I'd like to extend that respect to Aboriginal and Torres Strait Islanders as well. As sort of Shane alluded to in his introduction there, we are in a cycle where a lot of commodities are booming. Record copper prices, lithium, iron ore has been strong for some time, but we also have an area of quite a bit of uncertainty globally in terms of increasing interest rates. I saw in the US today their last quarter was has 7% inflation, and a lot of the value of gold comes in terms of being an asset where you can actually protect your portfolio by investing in gold. So obviously with increased inflation, most currencies devalue. Well, gold being a physical asset generally is counter-cyclical in that respect, and that you can actually it'll either keep its value or increase its value over times of either increased inflation or inflation change. As you can see from that graph there, if you'd invested in gold in the early 2000s, you'd have been a lot better off than a lot of the other investment opportunities, either through bonds or through investment through the S&P or Dow Jones index. You can see that gold would have done pretty well for yourself in the last 20 years. Obviously, there's periods within that where one may outperform the other, especially in the last few years. There's a lot more competition for money, especially with the use of cryptocurrencies. So yeah, there's a lot of volatility, but we see as gold as a place where you can actually get a physical asset and it will never lose its value. Who mines gold? So you can see there on the left, the big three players in the world are China, Russia, and Australia. And I do believe that as of 2021, Australia is now the highest gold producing country in the world. So yeah, it's quite a remarkable effort considering all the issues we've had in Australia with COVID and stuff. But yeah, Australia's crept into top spot in terms of being the biggest producer of gold in the world. And that's a testament to a lot of things. It's a very safe country to invest in, Australia. There's little corruption, I would say never, because you can never trust politicians, but there's very little corruption in Australia. There's strong governance. There's over 100 years of mining law, and it's a safe. People know that they're going to invest in Australia. There's a set process for doing it, and there's very well-known risks. So a lot of people invest in Australia for that reason. Why most of the big global mining companies, Rio Tinto, BHP, are based in Australia for that reason. In terms of what gold's used for, 47%, close to half, is still used for jewelry, and that is actually driven a lot by customs, especially through Southern Asia, through India and the Middle East, where jewelry, and especially gold, is very much part of the cultural norm in terms of giving and as a sign of wealth. The next is for gold coins and bars. So you can buy gold coins, buy gold bars yourself, have them in your safe or have them at the mint to keep them secure, and sell them and trade them as you require. And then the next set of gold is really just used in terms of central banks and also for trading as EFTs. So there might be gold indexes that are traded and so on. And then the sort of commercial uses where they're used in generally high-end electronics, and also dental and medical uses where gold, unfortunately or fortunately, there's only a finite amount of gold, and because of that, the cost per ounce, so US, I think it's about 1830 today. So it's close to $2,500 Australian for 31 grams. So obviously it doesn't get used widely, but its properties of gold, it's one of the best conductors. It's also very malleable, and it can be, put down to 1 atom thick in terms of electronics. So that's really where its value is. And it'd be interesting to see if that does expand with our shift towards more of a green economy, if there is a greater use of gold in circuitry because of these properties. As I alluded to a bit earlier, Australia is very well endowed with gold. So we've got 80% of the world's share of gold, and we produce over 350 tons of gold, and we've got the largest gold resources. So that's the gold that's still in the ground that hasn't been mined. We've got the most of that in the world, and we spend a lot of money in Australia exploring for gold and mining gold. It's in the state I'm in, they've been mining gold here for close to 130 years, and it was pretty much the first thing mined here in WA, and a lot of Australia was opened up through the discovery of gold and subsequent gold rushes. In terms of contribution, you can see $20 billion alone in 2016-17. It produced a lot of money into the economy, and it really is really important for generally our regional towns, which generally only exist because of gold mining. So here's the map of Australia. So for those who are not overly savvy on that of WA, so we're on the western side or the left-hand side of that picture, where most of those yellow dots are, which are where all the large gold mines are in Australia. So 80% of the world's, 80% of Australia's gold comes out of Western Australia. And we have a lot of things going for us in Western Australia. So our regulatory system, the system allows you to get land to explore on or to mine is well developed. The government provides a lot of incentives for people to go out and explore. So you may either get money in terms of a tax incentive, or they might give you directly money to fund projects that might not get done otherwise. The governments also sponsor, they have their own geological teams, exploration teams, that actually provide data to everyone to also increase exploration. In terms of research and technology, WA, most definitely probably the epicenter for research, technology, world-class mining practices, autonomous trucks, trains. Yeah, a lot of it happens here in WA. So there's a lot of expertise in WA that, regardless if you're a big player or a junior miner, you can really have this network where it allows you to pull on this world-class research and technology. Similarly, for exploration mining, there's a lot of people here that have years of experience, and they come with a lot of specialty skills, and they're easy to find, and you're easy to get your work done. So in terms of actually getting a project and a gold project, if you want to be anywhere in the world, you probably want in WA, because as you saw, we're the biggest gold miner, and then 80% of that comes out of Western Australia, and that's where our project is. So we're definitely in the right neighbourhood, and we believe our project could be one of these next yellow dots on this map here. So in general, to put this picture together, if people don't really understand how gold mining works, so in that cartoon you see there, there's a pit that's dug in the ground, or you dig deeper and you put in a long shaft and you mine underground. But most mines start as an open pit. So they have multiple benches. You can see there, like the contours, they might be like 20 meters, you might dig off 20 meters, take that dirt out, then mine the next 20 meters and so on downwards. And then that dirt will go to a processing plant. For gold, you're talking about parts per million. So for example, a good project may have 2 grams in a ton. So you have to mine a lot of tons to get, you have to mine close to 16 tons to get 1 ounce. So you can imagine most of the dirt that goes into the processing plant comes out as waste, and the small fraction of gold that you take out of that then goes to generally a refinery. So in Australia, the premier refinery is at the Perth Mint. So you may pour some gold bars at your processing plant and then send them to the Perth Mint. They'll analyse how much gold in that, work out the value, and then that gets then transported to whether you sell it, goes into a bank, it goes into a long-term vault, it gets remade into jewellery, or goes into electronics, and so on. So that's the general flow of how the mining process sort of works. And some of those, most of what we'll be speaking about today is the mining, the sort of open pit area, and then the processing area. So that's, our project has the ability to have both of those. In terms of spatially, generally the processing plant is on next to where the pit is. The refinery can be anywhere. Most gold is then put in a helicopter or a plane and flown to the refinery. Those things don't have to be close to each other. Yeah, so I'm just going to go through now some of the project details of our project itself. So Shane introduced myself, but like anything, I'm part of a bigger team and got some really capable people as part of our board, and also people that work for us, especially in the field, that do all the really hard work. So Gary Lyons, very respected businessman. A lot of people on this call maybe know of him as the chairman of GWR, and that's been a very successful company. He's also chairman of Tungsten Mining and E-Metals. Tech as well. He's a Malaysian-based businessman with vast experience internationally. Has worked all the way through Asia. You can still read his details there, but comes with a lot of information, a lot of knowledge in terms of how to make our business profitable to our shareholders. And also Pat Berg, who comes as a background through law, but also has worked with a lot of junior and mid-tier gold companies and making sure they're successful as well. So we've got a really good compilation of technical and business and project savvy people, and with the people we have as employees, I think we have a really good team that can get the most out of our project. So as I sort of pointed out earlier, we're in Western Australia, and we have a project which we have 100% of the gold rights for. At the moment, we have a resource, so that's how much we know is in the ground, of 293,000 ounces at 2 grams a tonne. So if you just to take all that gold out of the ground, assume there was no cost involved, that's the equivalent of having $740 million of gold in the ground. Obviously, there's cost involved in doing that through that process, but that's actually the in-ground value of that gold. And obviously, we're not happy with that. We want to increase that, create more value for our shareholders. In the diagram there, you'll see that there's like a pinky blob. That is the main gold fields, and the green, or we call greenstone, and that's where most of the gold is hosted. And our project is in the northern part of the gold fields, not far from Wiluna, which has been mining for over 100 years there, and mining underground there now. That's a world-class ore body, and we're within 30 kilometres of that. In terms of the ground we work on, all the ground we have work on are granted mining leases, and also have a native title agreement. So for those who are not aware of what a native title agreement is, it means that we have an agreement with traditional owners of the ground, the Matri people, who are the first peoples of Australia, and that agreement allows us to explore for gold in the area, and also provide provisions in terms of if you mine and so on. So that agreement is a really strong agreement, and we work closely with the Matri people in terms of trying to get our project moving forward, and also providing opportunities for their people. So half of the employees of our team come from Wiluna and all Matri people. So we've really built a good relationship there. We also have some strong strategic shareholders, not including or including Incor. So Incor venture natural resources investor and own the Paru lead mine, formerly the Magellan mine, if people have a longer memory. And that's 40 kilometres from our main project area. It's actually where we stay and are camped at their mine site. That mine site at the moment is not operating, but does have an existing plant that potentially could be an opportunity to mine process some ore there if some agreement was reached. So yeah, there is opportunity not to, or what we really hope to do is find enough gold where we can build our own plant and deliver all the value to our shareholders. So I just chucked a few photos in here for those that haven't been to Western Australia or don't really understand what it looks like. It's, vastly different than Malaysia. Yeah, so this is looking across our project area, and this is where you can see in front of us. They're pretty much the drill lines, and you can see it's pretty flat. If it looks dry, it is dry. There's not a lot of small shrubs, but it's a pretty open and sort of desolate place. Has its charms, but it's definitely a void of a lot of things. Doesn't have many people live there. It doesn't have a lot of animals or rare trees or rare animals. So in terms of that, it's quite an easy place to work, or it does have challenges with heat and so on. And I put this photo in as well. These are some of the old shafts were mined in the 1920s. So this area was explored in the late 1920s, and there's two areas that were historically mined. And then most of the Wiluna area shut down during the Second World War. Unfortunately, a lot of Italians worked in this area, and as part of the Second World War, a lot of those people got taken off the mine sites, and so a lot of this area was left abandoned. And so most of the exploration really was a quite long hiatus till the 1970s, where there was some mine exploration, some for copper, some for nickel, a little bit for gold. Then there's been patchy exploration for the next 20 years, and really over the last 20 or 30 years, there hasn't been really any active or modern exploration used at all. So there's a real large amount of upside here. We know there's gold here, just not many people have explored for it. We're right out in the middle of, away from most population centres, so it's largely been overlooked, and it's got a really good upside here. I'll just talk you through this a little bit because it's a little bit of a busy slide. So you can see in the centre diagram there, that's our tenement holding. So it's about 83 square kilometres, so about 25 kilometres for one end of that from the south to the north, and 3 to 4 kilometres wide. To the east are the town of Wiluna. The Wiluna's got a population of 200 or 300 people. And then the next town from there is about 200 kilometres away. And in terms of plants, so as I spoke about before, Rosalind Hill plant is just north of our project area, and the Wiluna processing plant is just to the south of Wiluna. So both about 30 to 40 kilometres away. In terms of all our where all the gold is on our project, the far right picture there, the colours in that picture refer to the magnetic properties of the rocks. So it just picks out rocks that are similar magnetism, and then sort of tells you what rocks are what, and then you can sort of use that to determine where you think the gold may be. So as you can see there's numerous areas where there's either been gold found or mined, or where there's a resource. Most of the resources are in the southern part. So if you look at the bottom of that picture, golden monarch, eagle, emu, that's where most of the resources are. Most of the drilling historically has been done. Our exploration strategy is to explore all of our tenements and find the next big find, the next million ounce deposit, 500,000 ounce deposit, because that will really create a lot of value. But there has been a lot of gold occurrences, and we're pretty confident just from our current drilling, we're going to keep on finding more. When I talked about mineral resources, they come with different levels of confidence. So you can have measured, which is the most confident. So with a measured resource, generally when you drill holes in the ground to determine what gold's in there. Generally, where we are, we'll drill a 10 by 10 meter spaced drill pattern, or 10 by 20, and that'll give us enough confidence that what the gold we find in those holes is elsewhere in that deposit. So if we drill enough holes, we'll get the right answer. Then indicated, a little bit less confident, and then inferred, a little less confident again. And it's all based on drill spacing and also geological confidence. Do you think if you drill one hole and a hole 10 meters away, will the gold go from one hole and then be also present in the next hole at the same sort of grade? So that's what we mean about confidence. The most of our deposits at the moment are inferred, and it's really gold, monarch, eagle, and emu. That's where most of our resources are, and gold monarch is the only resource where we actually have significant amount of measured and indicated. Having said that, a lot of those other deposits, especially from bottom camp through to Wren, still have some decent grades in. They just don't have enough drilling in to support having more tons. So we're really confident that just by doing extra drilling around the known deposits will also increase our amount of tons and also the confidence or resource classification. But yeah, so we're a pretty new company, Western Gold. We've been around for close to 6 months, and in that time we've done a lot of work, to be honest. We've done geophysical surveys, so we've actually basically put electrodes on the surface of the ground and put a current through it to determine what's underneath the ground, what's in the rocks. We've done 3 drilling programs. We've done a lot of exploration work looking for new targets, and we've had some really good results. For example, we've featured in the top 10 or top 20 gold intercepts. Last week Western Gold there was 6 on the list of top gold intercepts in Australia, with 6 meters at 11.66 grams a ton. And so yeah, we're really showing that we can match up with the best companies and keep on finding more gold. So all those drilling we've done so far, we haven't converted into mineral resources yet. So we're early this year, we'll be planning to move all the drilling where we found gold and turning that into a mineral resource and updating our numbers to try and grow that 293,000 ounces, try and grow that up to 400, 500, and up to 1 million ounces over time. So this is a really good slide to really understand the value in exploration and sort of, I suppose, the value pipeline of where investment gives you the best return, subject to generally higher risk. So generally at the start, if you look from the left side, a company will start and then it'll start exploring, and where that yellow dot there put on, that's where our company Western Gold Resources is. We started drilling, we found some stuff, and we start creating value, and that's when generally your share price will increase as you start creating value. And then you find the big deposit and you start going, okay, we're going to start mining. There's always a gap between finishing and the excitement of finding the big gold deposit to actually mining. There could be several years of studies and regulatory hurdles, environmental surveys to get through to start operating. And then once you start operating, producing value, getting money back to your shareholders, your share price and the value of the company increases again. So there's a bit of a cycle here. And obviously, as you go from the start towards mining, you decrease your risk, but your value of where you invest also decreases. So the most value you can get in investing in a gold junior is at the exploration phase. Because if they get through to mining, then you're going to maximize that whole cycle and get all that value. And I think that's it for me, Shane.
Okay, thank you so much, Mr. Warren Thorne, for sharing with us the about Western Gold Resources as well as the upside of gold and also your project. All right. So if you have any question you would like to ask Warren, you may write in the Q&A box, and then we'll address them accordingly. Okay. Don't write them in the chat box here. Okay, I've got a number of questions on my Q&A panel. First question is by Juki Lim. Now we know that gold is a natural hedge for inflation, but with imminent hike in interest rate, do you think that gold price will fall? Is it interest rate go up, gold prices will fall?
Well, if you go on past history, as inflation rises, generally gold price increases as well. So it sort of hedges against the devaluing of that dollar. However, speculating in the future is always difficult, Shane. As you can imagine, it's always difficult, hard to say. Like, to be honest, a year ago when COVID really took hold globally, one would assume with all the risk and so on, a lot of people would have invested in gold. And the gold price has been pretty good for the last year. Will it increase further? I can use a personal example myself. I was speaking to our financial planner last week, and we were changing some of our superannuation details. And a part of that, we're now investing in gold because of the rise in inflation. So based off with my personal experience and what I've learned from the past, you can make a reasonable assumption that gold should increase in price as we increase both interest rates and inflation.
Okay, thank you so much, Warren, for your view on interest rate and gold price. So the next question is by CK Liu. What is your time taken from exploration to production?
Well, yeah, so that period there can be, so we don't have a set period right now because there's different outcomes depending on what value you want to provide. So in Australia, you need to have the mining approvals. So we have that one mining approval where we can actually go and mine tomorrow if we wanted to at Golden Monarch. We have also 2 approvals in process at Eagle and Emu. So technically, well, theoretically, we could be mining in 6 months' time if we wanted to. However, obviously, that would be a smaller resource we'd be working with, and the cost per ounce in terms of mining that would increase because of the smaller tonnages. Obviously, as you increase your tonnage and the amount of gold, you decrease your costs. So at the moment, we don't have a plan to start mining. Our plan is to find more gold so we can create a bigger plant to lower our costs and create more value.
Okay, thank you so much for the clarification. So what is the distance from the project location to Perth?
It's 900. It's about 930 k's on the road and about 700 kilometers in a straight line.
Okay, so 930 kilometers by the road, lah.
Yeah,
okay.
It's quite a drive.
Certainly. Are the major shareholders from Malaysia? This is the next question.
Yes, they are. So we have many investors from Malaysia. Many of those invested in the company we divested from through GWR. So GWR currently mine iron ore on the same tenements that we operate on. So that company once, or up to last year, was a gold and iron ore company. We divested, so Western Gold was born, and we're the gold company and they're the iron ore company. So a lot of the investors that were part of GWR also now are part of Western Gold. And so from my belief, we about 30% of our investors are from Malaysia.
30%, yeah?
Yeah, so 30 very smart percent there, I believe, yeah.
Yes, we have one of the non-executive director on the line with us today too. Okay. So the next question is there any need for capital or funds till full feasibility study?
Yeah, so we're at the exploration phase. So for us to go into feasibility is not something we're looking at. We want to spend our money in terms of finding more gold. And then our process is to find more gold and then raise more capital for either feasibility and for mining studies and building a plant or a mine site. So we're trying to use all the capital we have now to explore and increase that resource base.
Okay, understand. What is the expected all-in sustainable cost for the project?
You're saying the cost per ton of mining, is that what that means?
All-in sustainable cost, like, including exploration, production, per ounce, how much does it cost for you to produce 1 ounce of gold?
Yeah, so in the exploration phase, it's generally pretty cheap. It's usually around about 10 or 11 cents per ounce or so. So very cheap. All-in costs. Once again, I have to use some pretty broad assumptions here. So we've done some. When we do resources, we have to optimize our pits, and they come with some assumptions of mining costs and so on. So the all-in cost was we do ours at $22.50 Australian, $2,250 Australian. Before everything gets optimized at. So anything, and we make money at that level. Anything, if the cost is lower, then we obviously make more money. If the cost is higher, we make less money. So $22.50 Australian is what we optimize everything at. What the actual mining cost will be is difficult to know. There's wages are pretty rampant in Australia at the moment. I'm not sure what it's like in Malaysia, but cost of labour has gone up quite a bit. But also technology advances have made some things cheaper. It's a difficult question, but there is definitely a gap. Like for example, if we were to mine today, we'd make $250 for every ounce we mined.
So, okay, do you say 2,250 Aussie dollar per ounce?
Yeah, so that's what we
2250.
Yeah, 2250. Yeah.
Oh, so what is it equivalent in a US dollar?
Oh, so that would be around 16. I'll have to calculate that out. I think it's over 72. 1800.
1800.
1600.
1600, yeah.
Yeah, 1600 US dollar per ounce, right? So that includes all the fixed costs at operating the mine, am I right?
That's right, yeah.
Okay, so it's 1,600 US dollar per ounce for operating all-in sustainable costs. Hope that addressed that question, CK. The next question is it an open pit or is a UG project?
All our current resources are open pit.
Open pit. Okay. Do you have any major gold miners or producers nearby your project?
Yeah, so the probably the biggest one is Wiluna Mining. So they've just started mining. Have been mining for a while, but they started ramping up their concentrator. So that's a 10 million plus ounce deposit, 10 million ounces. So that's probably the biggest one, and that's basically in Wiluna, 30 km from where we are. The next areas are probably at Sandstone, which is about 70 kilometers from us, and then in Mikasara, which is about 180 kilometers from us. It's quite a large mining centre there as well. And probably the next one is Jundee. So Jundee is a large underground deposit. That's about 100 km from us as well.
Okay. How do we? The next question is by Wayne. How do we buy Australian shares in Malaysia, and is it subject to Australian taxes on capital gains and dividend income? I think, Warren, are you familiar with this? If not, then maybe I can take this question.
Yeah, I'm not over familiar about the
Okay.
Dr. I's and lots of tea, but I believe through. You probably best answering this, Shane. Actually.
Okay. So how do you buy Australian shares in Malaysia? Because I've personally, I've also invested in Australian companies before. From my experience, of course, you need a broker. Of course, Kenanga is here. If you need a stockbroking account to buy Australian shares, Cantrade offer you the facility and access to reach the Australian Stock Exchange market. So what you need to do is to ensure that when you sign an account with Cantrade, you need to enable, you need to ask for the global trading facility so that you can trade the global market. So the Australian Stock Exchange is actually, is offline. So what you need to do is you need to call your dealer representative to tell them that you want to buy Australian stocks. And for the case of the Western Gold Resources, the stock code is WGR. So you can tell them that I want to buy this stock, and then you place it offline. So the brokerage fee is the offline rate plus the Australian stock exchange brokerage fee. All right, so that's how you can buy Australian shares through a local broker like Kenanga Cantrade. Right. So is it whether do you need to pay taxes on capital gain and dividend income? Of course, I am not a licensed tax consultant, but as far as I know, of course, I stand to be corrected. As far as I know, there is no capital gain tax for non-residents. If you are non-residents, non-Australian resident, there should be there's no capital gain tax for non-residents. Unless that the shares are classified by taxable Australian properties. Okay, if the shares are not classified as taxable Australian property, so there will be no capital gain tax for non-residents. Now, however, there are actually dividend withholding tax. If I'm not mistaken, it is about 30% for non-resident. So there would be about 30% dividend withholding tax for non-residents if the dividends are not fully franked. If the dividends are fully franked, then it is 0% withholding tax. So that is what I understand. Of course, I stand to be corrected. For more accurate information, you can refer to any licensed and licensed tax agent or licensed tax professional. All right. So this is just my view on how to buy Australian shares and whether you need to pay capital gain tax or dividend income tax. All right. Hope I addressed that question. The next question is by Zakia. What are your company's ESG initiatives?
What does ESG mean in that?
Yeah, ESG, yes, environmental, social, and governance initiative. Do you have any plan in this?
Yeah, of course. That's just part of working in Western Australia. All companies are required to have environmental and social policies. So in terms of your ability to work on your project, you have you have to go through quite exhaustive process in terms of environmental work, in terms of getting people on the ground, and also the regulatory process. Our social policy really relates more to our cultural heritage program. So as you saw in those pictures, there's not really anyone that lives where we are. However, those grounds we work at have cultural significance for the Martu people, or generally the people that live in Wiluna. And so we have a Aboriginal Heritage Agreement, and a part of that, our social responsibility, is to enable and support the Martu people in terms of upskilling them, providing jobs, providing them as preferential for contracting jobs, and also increasing the education of the people there. So we have a pretty strong policy there, and we really enjoy that engagement in terms of our company. As I sort of spoke about before, half of our employees come from the Martu people. In terms of more sort of maybe globally significant events in terms of global warming and our responsibility to making sure we reduce our footprint in terms of carbon and so on. We've started shifting a lot of our disposable items into totally 100% environmental stuff. So we don't use any. We reduced all our plastics on site. We try and reduce our footprint in terms of carpooling and making sure we try and use less fuel as we can. So in terms of that's just what's accepted from companies these days. That's what investors want to see, and as the director of the company, that's what I want to see. Part of our company is to be seen as someone that outwardly looks after its people and looks after people that it works with.
That's great to hear that. The next question is by Stephanie Chiu. With inflation and supply chain disruption, will your cost of production go up?
Yeah, well, we were speaking about this before, Shane, in terms of disruption with COVID. So the main costs we find are with people. So people and good people are a rare commodity in Australia at the moment. There's pretty much closed borders, so we don't have a lot of immigration. So there's a lot of jobs and a sort of captive population. So employment costs have gone up, and also it doesn't just relate to getting people, but other departments that you rely on, they also have sharp staff shortages. So everything just takes a little bit longer. So that can be overcome to a degree by more forward planning. So not trying to be too reactionary, but trying to plan out over 6 months' time. So small changes don't upset you too much. But yeah, what we try to do is plan, and we set ourselves up where all the vital ingredients we need for this year's work we've already got. So we've got people planned to come. They're all booked in. We've got all the equipment, all the vehicles, all the expertise we need. We've all got that already planned. So barring things we can't control, I think we're quite well set up for sort of being as stable and as flexible as we can in these sort of challenging times.
Is that music from the background?
Sorry, that was me, Shane. That was my text message.
Ah, okay. A very nice ringtone. The next question is by John. This is an interesting question. How do you control or prevent employees from pocketing the gold that they mined?
Say that again, Shane.
How do you prevent or control the employees, your employees, from pocketing the gold that they mine?
Well, there's not much you can do apart from trusting people, but in Australia, especially in the goldfield, there is a dedicated police group called the Gold Squad, and they do take gold theft very seriously in Western Australia. Luckily where we are, we don't have a plant and we don't have gold bars being produced at the moment, so it makes it hard for people to steal large amounts of gold. But it does happen here, and people do steal gold, and luckily a lot of them do get caught.
Okay. So what happened to the land after depletion? This is the next question by Stephanie.
So after mining or after exploration?
Maybe you can explain both.
Yep. So exploration generally will involve clearing some land, usually with a bulldozer or a front-end loader, and part of that you'll knock down some trees. There'll be some disturbance from the vehicles using it. As part of your process of getting the approvals to explore there, within 6 months of that work, you've got to return that ground back to the way it was beforehand and let the trees grow back and so on, fill in all the tracks. So it looks like there's no one been there. In mining, the approval process is a little bit different. So when you apply for mining approval, you have to put in you have to assure the government that you've got the money to then rehab, because in the past, I think there's something like 6,000 gold mines in WA alone, which have just been abandoned and left, and there's big holes in the ground and waste and so on. So now the government has a scheme where you basically put like a deposit in to the government to say, yeah, here's some money. We say we're going to pay this money to you, and if we don't do our rehab, you'll use that money to fix up our mine site. So it's a lot more stringent than it used to be, and you have to try and keep as well as you can the landform or the shape of the ground to what it was before and after.
Okay, understand that. Jimmy would like to ask the next question. Copper, silver, and gold are grouped together with common properties, but gold lacks industrial applications. So can gold fetch fabulous price?
Well, you're right there that gold doesn't have the vast industrial applications, and there wouldn't be enough if it did anyway. There's not enough of gold in the world. And gold, I think, has never been seen as that. It's always been seen as, previously as like the gold standard, as securing cash or securing cash in banks. But I think also that currencies devalue with inflation. Gold is being a physical asset. Is typically have not done that in the past, have either kept its value or increased in value, because people want to buy gold when the value of their cash is decreasing.
Okay, understand that. Victor would like to ask, what is Western Gold Resources' end of exploration life cycle strategy? Is it divestment or bringing the mines to production?
Well, we're Western Gold about creating value for the shareholders. So could be either one of those. In Western Australia, the mergers and acquisition game is always busy. There's always companies willing to buy out another company, merge with another company, create value through growing assets and so on. But we honestly believe that we can find enough gold where we can produce our own value from mining our own gold. That's ultimately what we want to do. What happens between us from now to us doing that? There could be a lot of different variables that come up.
Okay, I see. Peter would like to ask, how much royalty to gold miners that you need to pay to the government?
In short, too much would be the answer if you were to ask any gold miner. So there's different sorts of royalties. The state has a royalty, and also we also have royalties as part of our cultural management plan. So if we end up mining, the traditional owners also get some value of us exploiting that ore. And on some of our leases, we also have royalty agreements with previous owners of that ground as well. So it's sort of a multi-tiered system of royalties in WA, but generally none of those royalties are significant to make a project viable or unviable.
Okay, so it sounds kind of complex.
It's a little bit complex. That's because just the way gold mining is. Say, for example, if you have a gold mine 100 years ago, that lease of ground may have been sold to 10 or 20 different people over its lifetime. Every time, perhaps when a new deal's been made with a new owner, the previous owner wants a royalty on selling that. So if they find the gold, I'll sell it to you, but if you find some, you owe me a royalty, and then it might go into another person's hands, another person's hands. So the royalties can be sometimes a little bit convoluted. And then also, obviously, as part of our social responsibility, we also have our cultural obligations in terms of setting up royalties for sharing with the traditional owners of that ground. But having said that, I'm not talking about 20 or 30% here. We're talking in the percents of the total value of the project. Okay,
understand. So are all these royalties factor into the all-in sustainable cost that you have mentioned, 2250? Yes. So it has been factored inside. Okay. The next question is, why are gold mining company shares so volatile? Like Regis Resources and Dacian Gold are two examples of persistent share price declines.
Yeah, well, strange to say that because there's some companies that just don't attract investment. Regis is a very good company. They've got a strong track record of being successful, providing value for their shareholders, but have never had a really good, strong share price. It's probably one of the intangibles of maybe of the stock market. Shane, I'm not over some of those companies and how they operate and the people involved. Maybe it's more to do with why some people are more profitable than others. They just are sometimes.
Okay. Just like I mentioned that the all-in sustainable cost for the project is about 2,250 Aussie dollar, which is equivalent to 1,600 US dollar per ounce. So what would the company do if the gold price fall below 1,600 US dollar per ounce?
I suppose that's the challenge of gold mining.
Yeah.
Is to be dynamic. The gold price is variable, and gold miners are generally pretty pretty flexible sort of companies. You got to make the most money while the price is high, and when the price is low, you reduce all your capital costs, try and reduce your OPEX costs, and try and make it through to the next upcycle. Those that don't make it, either go bust or they go into receivership. But you hope that what you do is your ore bodies, the value of your ore body and the properties of your ore body make it that it's profitable under a wide range of costs. So the costs we're using before, we spoke about what we have now, right? Finding more gold will change those variables. So from 293,000 ounces, having a 600 or 700,000 ounce deposit, the cost per ton is a lot less, and the ability to scale up reduces those costs more. So you become a little bit immune to price decreases when you have a greater resource base.
Okay, understand you, Warren. So if any more questions for Warren, you may write in the Q&A box. We have 10 more minutes left for Q&A. So if you can grab this opportunity to ask Warren, you may type in the Q&A box here. If there are no more questions, then we may conclude this earlier. So Western Gold Resources is a newly listed company on Australian Stock Exchange. So the stock code is WGR. So if you want to access this company, you can go through your local broker. For example, Cantrade offers you the facility to access the Australian Stock Exchange. So what you need to do is to open a Cantrade trading account, which I've given you here. So you can go to www.cantrade.com.my/open-account-form. So if you are not yet a Kenanga Cantrade client, you may go ahead to this link that I just given you in the chat box. So www.cantrade.com.my/open-account-form. So fill in your interest. Put down your interest in the form, then Kenanga will arrange a friendly dealer representative to cater to your needs to open a trading account. So when you open a trading account, you may indicate that you want to have global trading facility. So once you have a global trading facility, then you'll be able to access a global stock market, including Australia. Okay, so for Australian stocks, there's no online facility. So what you need to do is to just call up your dealer representative to tell them that what stocks you want to buy, and then they will serve you to that. All right. So the brokerage fee is Australian stock brokerage fee and also Malaysian stock brokerage fee. So so this is the arrangement for Cantrade clients. CK would like to ask, any potential for listing in Malaysia?
I would think right now that would probably be no, just because where we're situated and the size of our company. I think right now we probably sit pretty well on the ASX.
All right. So looks like no more questions on my Q&A panel. So Warren, any final words that you want to share with us before we conclude the session?
Just to thank yourself, Shane, and thank everyone that dialed in tonight. Hopefully it was an interesting talk, and you learned a little bit about gold mining in WA and a little bit about how investing in junior gold companies, especially WGR, could be a really good investment choice.
All right, thank you. Now I got one more question pop up in my Q&A. Yeah. Maybe I'm not sure if you will be able to address that. This is a very interesting question. Peter like to ask, if Australia has so much gold resources, why is the sovereign wealth not high?
The sovereign wealth of
the country, I believe.
Country? Oh, yeah. No, we do it okay. I think we're 13th strongest economy in the world. So standard of living's high. tax is a little bit too high, but yeah, I suppose one of those things like you can't mine all the gold all at once, right? Like it just doesn't operate like they have vast resources, but to turn that resource into actually a mining involves a lot of investment and a lot of risk that goes with that. So generally only the best depositors get mined, and those other resources, a bit like our own, need to be grown, made bigger, wait for something else to change before they're viable.
Okay, understand that, Warren. Yeah, even though thanks for taking the question, even though it's not related to your company. Yeah. All right. Okay, so let me conclude the session by sharing my slide. Okay, the last shout out is that if you are not yet a Cantrade client, you may go to this link that I've given you in the chat group to open a Cantrade trading account. So then Kenanga will arrange a friendly dealer representative to cater to your needs to open a trading account. So with that, thank you everybody for tuning in to this session, live chat with Western Gold Resources Limited, realizing the potential of gold. Okay, so that is brought to you by Cantrade and managed by Wealthford. So thank you everybody. Thank you Warren and the team for tuning into this session. So hope you all gain enormous value from this session by understanding gold mining industry as well as Western Gold Resources. Okay, have a pleasant rest of the day. Bye. See you in our next Cantrade webinar.
Thank you.
Thank you, Teck Wong.
Thanks, Shane. Thanks, Jason. Bye.
Bye.